All right, and we're recording. Welcome to my channel, episode number 2. My studio is coming together. This is really exciting for me. A couple more pieces of hardware that I want. I want a better microphone. This one's okay, but I'm gonna get a good one so you hear me nice and clear. And I just need some better soundproofing in this room. Hopefully you don't even hear an echo now, but we're really gonna get some quality material to stop the sound from bouncing. But anyways, we got a silver show. We're gonna talk silver today. And I do wanna mention that I've renamed the channel, and I think I'm gonna be sticking with this, is we're calling it Psycho Silver. And the reason it's gonna be called Psycho Silver is, first, it's a little catchy, but mostly because there is one huge Jedi mind trick, a Jedi mind fuck, having to do with the entire precious metal space, and particularly silver. People are so confused about what has value and what doesn't have value, and even just the phrase digital asset is it's a contradiction. But I'm not completely naive, and I would tell you that I did start to learn about the debt and inflation and monetary policy. I was introduced to a lot of that stuff because of Bitcoin. And so I know that the silver stacking community can be divided in that way. There's people that learned about debt, inflation, the Ponzi scheme that is the dollar. There's people that learned about that a long time ago, and they started, there's men out there that have been stacking since the 80s, very knowledgeable men, and earlier. And I think all of them expected this to come to a conclusion much sooner. I'm sure 2008 felt like a conclusion. And there's a younger generation, and I know for a lot of the younger people that have found silver and began silver stacking, you started out like Bitcoin and the crypto space educated a lot of younger people, and now they're learning more and more. Maybe they're diversifying, or maybe they're seeing the truth. Unfortunately, many people got burned with their cartoon monkeys and their Lunacoin and all this other stuff. I was into it for a while too, so I'm not better than anyone else. But there's a lot of people that are seeing the truth, and they're coming over to the silver stacking community. And that's why we see Wall Street silver growing every day, and you see investment demand rising in the silver space, and you see all these new channels popping up, even mine. People are getting hip to that. And so those are two different, I'm sure it can be divided in other ways, but those are two of the big groups and divisions you can find in the silver sphere. But I don't want to go on too long about that. We're going to do 2 quick things on this show today and try and keep it under a half hour. Is first, we're going to look at some current events. We're going to talk about the vaults, and I want to jump in and show you something that I've studied and learned about treasuries. And there's a lot of talk right now about the Fed. They call it the Fed funds rate, the Fed's rate. I'm sure you've seen a lot about that lately. And I have a very rudimentary explanation for that, because I know a lot of you don't know that. And this channel here, Psycho Silver, we're gonna keep it very basic. I'm not a very sophisticated investor. I'm not a financial mind. There's people that have had entire careers in STEM, and then they move over from the technology space. They move over to finance because it can be that sophisticated. But we're gonna keep it casual here. We're having fun. We're speculating a whole lot, and that's one thing they don't get to do, is speculate. And I'm gonna speculate quite a bit. And we're gonna, the juicier the better. We're gonna talk some silver psyops, some silver conspiracies here on this channel, and that's one advantage. So I will be providing whoever watches my channel with some basic knowledge about economics, about finance, about investing, and we're gonna learn along together. So join me. So on to the current events. it's hard to believe that, on that note, everything that's happening with Russia, they're mobilizing troops, and I did watch the Vladimir Putin speech translated, and if you haven't done that, I recommend, regardless what you think about him, he was choosing some very potent words, and I tend to believe him, and that's not to say that I trust him, because he lies too. I mean, the whole excuse that they gave for shutting down those, they said it was for maintenance when they shut down those pipelines that were providing natural gas to Europe. And we know that's bullshit. But he does seem like he is serious when he speaks, and he said some very serious stuff. And that was the biggest news of today. Just wanted to throw that out there. I do recommend you watch that and listen to that. But we're going to talk silver. So, right here we have Michael, hashtag Silver Squeeze on Twitter. And this is one of my favorite accounts to follow on Twitter, because Michael, you can count on this guy every day to give you new statistics about the Comex vault. And that's the vault that we follow, because that's the vault that we set out to squeeze over 1 year ago. And we do see that it's draining like it's supposed to. Some people thought it would be a fast process, and they thought wrong. We're in the middle of this silver squeeze. Comex registered silver totals dropped to 43.5 million ounces. Lowest level since February 12th of 2018. Vault drops to lowest level. Okay, so there's a difference between the vault and the registered. The vault drops to the lowest level since June 16, 2020. Open interest is now equal to 208% of the vaulted silver. Open interest now equal to, Also, on the registered silver, the open interest to the registered silver now stands at 1,511%. So let me reiterate this, and let me explain it if you don't already know. The 1,511% there stands for how much open interest is against the registered silver. The difference between the registered silver right here and the vault totals is the registered silver is up for sale, and everything in the vault is not up for sale. And maybe it will be for the right price, but when it moves into eligible, this is the eligible here. Eligible means it has an owner, and they can choose to sell it at whatever price they see fit. Whereas the registered is available to place shorts against, and so not all the open interest is short. So remember that. The open interest can be a long paper contract, but it's the shorts that we think about, because it's the shorts that can be squeezed. And that's kind of what happened with GameStop. I know they're very different markets. Silver is a huge global market, and GameStop's a little medium cap stock. But some of the principles are the same. And one of the principles in GameStop is there was not enough stock for the shorts to buy back at a reasonable price to close their short positions. And what we can see happen here with the silver is there's not enough silver in the vault for the people with the short contracts to borrow from or to pay back if their shorts blow up. So just remember that. We care about the vault total, but it's really that registered amount versus how many shorts that we care about. And what's really important, and let me just say this one last thing. There is other silver that's not in the Comex. We know that. But in the second, so Comex is not even the largest hoard of silver. As far as I know, the largest hoard of silver is in the LBMA, but they have the same situation. It's the same situation in the LBMA, and maybe we got to make that part of what we check out every day. But their vaults are also dwindling. The amount that is open to buy and sell or place paper bets for or against is dwindling. Here we have JC, and I just borrowed his Twitter comment to illustrate the point here. JC says, wow, Comex silver inventory down another 1.24 million ounces. At this rate, the vaults run dry in 255 days. And that's assuming that the silver continues to drop at the same rate. And I see we have Happy Hawaiian here. Let's see, he's asking is this count a parody? Is it real? It might even be a bot, but I'm gonna go ahead and take those numbers. Oh, okay, here we go. This is important. Hey, we found something. This is a better comment here. So, at the rate that the vaults are dropping, there's only 36 days of silver left in the registered. Amazing. So we are potentially a little more than 1 month away from a real silver squeeze. The question is who's gonna save the day? Who is gonna replenish those vaults or volunteer to sell their silver for such a low fucking price when you see what's going on in the world right now? You would be out of your fucking mind to sell your silver, especially to people that want to see the price low, because silver is what challenges the dollar supremacy. It's the oldest money in the world, and that's why they need to keep it contained. Remember that. Next thing up, we have a tweet from the Grand Marti, one of my favorite accounts on Twitter. This guy, whoever he is, I never met him, has been making incredible calls, and he posts a lot of technical analysis. A lot of them are very simple, like this chart that you see right here. But he has been so reliable, and he's been a contrarian. And he had a lot of trolls for calling the direction of Bitcoin specifically over a year ago, calling for Bitcoin to come way down to 20,000 and below. And he's in fact calling for it to go much lower, much lower than it is right now. So do follow this account. But okay, what we're pointing out right here is this is the 10-year Treasury. The 10-year Treasury is an important benchmark. Investors everywhere look at the 10-year Treasury for information. And what our man here, the Great Marti, is pointing out is he thinks that we're about to see this thing blow sky high. And that is sky high. And we'll look at another chart to show you why. What this means, it can mean a lot of different things. I researched this a little bit. But what I understand about this treasury yield here is that it's going up because nobody's buying them. So the rate has to increase when you don't have buyers. And we've reliably had many buyers. Foreign countries buy these. Big institutional investors buying for pension funds buy these things. And you would think that because the stock market is going down, there would be enough demand on the demand side to make this yield go down. Well, that's not happening. And maybe that's a question we can ask to a big time economist. Once we grow this channel, at a certain point, we're going to get some good interviews. And we're going to ask them good questions. But let me show you this. Here is a super long-term. This is a super long-term look at treasuries. This is a 30 years, so that's not quite the same as a 10-year. Maybe we need to find it. Maybe we need to find a 10-year long-term chart. Let's see what we can pull up real quick. We'll do it live. Long-term 10-year. Okay, long-term chart. This is perfect. This is what we wanted. All right, glad I didn't get some dead air on this show. Good shit. Look at this. This is something else. Since 1980. Up until now. Look at this long-term. That's not the best trend line I've ever drawn. Let's try this again. You get the picture. Look at this. Going down. That's not even a tight trend line. But you get the picture here. On the 10-year, that's the benchmark. There's other kinds of bonds for different periods and different structures of how they're paid and all that. But this is the benchmark. This is the one that people look at the most because it's a good medium range, right? Since 1980 something, 83, it's been going down. And I said, that's really, really interesting. Why? I guess there's been a great demand. So that is faith in the dollar. To see this in such a long downturn, such a long-term trend down. And I became curious. And this is not a riddle we're gonna solve today. We're gonna keep digging at this. But I did ask a question. And it was to Google. And since Google's so terrible at actually getting you information these days, I had to ask it more than once. Remember when Google used to work? Google does not work anymore. I'm better off. A lot of times I ask the question to Reddit. I ask it to Twitter. And I don't mean directly to users. I'll put it in the search box and get a better result than I do with Google. Because more and more, it's nothing but advertisements. And I'll use that word. I'll use the word disinformation. Really, really poor. They have their social engineering program, and you ask a question to Google, they give you really bad answers every time, and it's gotten worse and worse. I do remember if you're old enough to remember when it worked, there's a lot of people that aren't. So I wanted to know more about that, and I said, Google, help me out here. We came over here to the Federal Reserve Bank of San Francisco. That's an authority, right? The Federal Reserve Bank of San Francisco. That's like a big time authority, you would think. And I said, Federal Reserve Bank of San Francisco, why are bond yields on such a long-term downtrend? And I like their answer here. Long-term U.S. government bond yields have trended down for more than 2 decades, but identifying the source of the decline is difficult. It's very hard. I don't believe that. I think that's bullshit. I think the real cause of the long-term downtrend in the bonds is unbelievably simple. It might be multi-factored, so I'm not saying that it's just this one reason and there's not other factors, but we're gonna look into this, and this is gonna be an ongoing theme of the channel, is we're gonna slowly uncover what this is. We're gonna go on that adventure together. And we're going to get to the bottom of it. But I do want to point out that the bonds are the big daddies. This is how debt's created. This is how other countries hold our debt. So I know when we learn about this, we're gonna really understand. We're gonna get to the bottom of some shit. We're gonna fucking grow our understanding in a big way. Onwards. Okay, so before we look at these next couple websites here, web pages, I did ask another question. This is all over the news. So we did have, they say the Fed hiked rates. FOMC, Fed funds rate hike. What does that mean? I had an idea and I learned a little bit more. But they said the feds are hiking the rates to crush inflation. They're going to get inflation under control. said, okay, well, why does that happen? Why? So, like I said, I went and asked Reddit. So here on Reddit, we have the question posed: why do central banks raise rates to curb inflation? And we had one user with an answer here. We'll have a look at that. Make sure you can see it. Get a little bigger so you can see it here, because that text is a little small. Come on. Let me readjust this to something you can see. There we go. Much better. Much better. Okay, check it out. This user here answered: tighter financial conditions inevitably lead to a fall in consumer spending across most or all economic sectors. Tighter financial conditions lead to a fall in consumer spending. Spending is to control spending. This is exactly why central banks intend to do now: curb spending to curb inflation. But the effects of monetary policy can take up to 2 years to materialize. So does that mean we have 2 more years of 9% inflation CPI? Yikes. Yikes. That's compounding inflation, so big yikes on that. And I did have a really interesting, we're going to go back to this slide here, because let me show you this. Right here, there was a really interesting comment. And this is unrelated. So we were talking treasuries before, and now we're talking Fed's fund rate. 2 different things. Make sure be clear on that. But someone did leave a comment underneath the Great Martí, underneath his post. And this is super important. Once inflation gets above 5%, it has never come down unless Fed funds rate has gotten above CPI. Stanley Druckenmiller, and that is a very well-known and respected economist. I recognize that name. And the Great Martí says that's economics 101, and I fucking believe him. I believe not blindly, but if the Great Martí is saying it, I think it's a good bet until I am proven otherwise. So, what does that mean for us? If inflation right now let's see if they give us a good answer. Just tell us. All you gotta do is tell us. See, they can't even just tell us. CPI publications, new releases. Seasonally adjusted, they can't just give us the number. How you like that? Rose to 8.3%. So that means that we would need the Fed funds rate to go all the way to 8.4 for it to exceed. According to that comment, which sounded pretty freaking believable, you got it right here. It's at 8.3 over the last 12 months. Something to think about. So what does the economy look like with the Fed funds rate at 8.3%, 8.4? What does that mean? Well, one thing that I do know for certain is that much interest on a high amount of debt is a very big number. And if we do raise the rates that high, that is going to constrict spending to a point where we will see these companies that are not generating money, they're simply living off of bailouts and creating more debt. There's so many companies right now that are not profitable, but they get this big stock market cap. They're supposed to be like these huge, amazing companies, but they're not even fucking making money. And the way they get popular They created all this revenue, which is not profit. They created all this revenue by borrowing. With a rate that high, they would die. And there would be quite a few of them. And I think that's what they're afraid of. They need to stop inflation. But if they raise it too high, they really will kill the economy, because the economy is so unhealthy that it can't withstand what that would do to it. Now, how much of that is my opinion, my uneducated opinion? A lot. But I think I'm right. I know I'm right. Okay, next thing. One thing I wanted to just go a little deeper on is explaining, why does federal funds rate stop inflation? And I have it here. Oh, I meant to put the monitor back on. Let's look at this right here. I got a article from Euronews. We're asking the same question. Why do central banks raise interest rates to curb inflation? Here we go. Oh, forgive me, that was a little unresponsive there. Ooh, we are running into a little bit of dead air here. Uh-oh. Let me try this again. I just want to highlight this. This is it. Tighter financial conditions inevitably lead to a fall in consumer spending across most or all economic sectors. When demand for goods and services decreases, the price tends to decline. So when they raise the rates, people's borrowing becomes more expensive. If you have an adjustable, if you're someone that has an adjustable rate mortgage on your home, and you have an adjustable rate car loan, and the FOMC, the Federal Reserve, raises its funds rate, it raises all rates, because they're raising the rate on the banks, and the banks are going to turn around and raise the rate on you. And after you're paying more interest on your car, on your mortgage, you have less money to spend. And when you have less money to spend, the companies that provide goods and services have to bring the prices down. They can't charge as much because people don't have the money to pay them. And that's what is supposed to stop inflation. Interesting. But it's more dynamic than that, because they sure are creating a lot of money. And so you can be raising the rates to make it more difficult on people with adjustable loans and businesses seeking to take loans, but they're creating money in another way, like all the money we're giving to Ukraine, for example, right? So there's other ways that monies are created, and there's a lot of money already out there. 50% of all the dollars ever created have been created in the last 2 years. And so it's not necessarily the exact amount of money out there, it's how fast people are spending it. And so if people that do have money start spending it really quick, they choose to take their wealth out of the stock market and they don't put it into bonds, they keep it in cash and they start buying stuff, well, that can cause inflation. I hope that's clear. You know, no billionaire is ever going to go out there and buy 10,000 can openers and cause the price of can openers to go through the roof. It doesn't happen like that. But other strange things can happen. And one of these days, one of those billionaires is going to go and buy all the silver. And why they haven't, I would like to know that. So, last thing I'm going to show you, I'm going to divide this episode into 2 parts because we're at a half hour. And I hope that was interesting and entertaining. We're going to look at one more thing, and I'm going to do another episode right after that. We're going to look at, if you're a new silver stacker, we're going to browse the web, and I'm going to explain to you a strategy to make your first silver purchase. I'm going to give you my opinion as a very experienced stacker of years and years. If I'm going to be buying my first silver, and even if you've already stacked a little but you want some more information, I got a really good I got a lot of experience and I researched this quite a bit, and I have a lot of information that I can share. So if that sounds interesting to you and you did watch this one, I hope you watch the next one too. Last thing we're going to look at. Last thing here. Top foreign owners of U.S. national debt. Japan, 17%. China, 13%. United Kingdom, 8%. Swiss, 4%. Cayman Islands. Top. That's top. Why is China so? Why is Japan so high? Does that have to do with they adapted our economic policies after they surrendered in World War II? Could be. Food for thought. You do see the Cayman Islands on there, and one thing that I what I think about there is the Cayman Islands is almost a cliche. It's like I'm trying to find the right word for it, but the Cayman Islands, like the Swiss bank account, a private account in Cayman Islands has this stigma attached to it that suggests that a lot of shady things go on there. Your bank account in this Cayman Islands, that sentence right there, Cayman Islands bank account. And we did see the Cayman Islands referenced in, what was that? Oh, the Panama Papers, yeah. They are non-transparent. The bank accounts in the Cayman Islands is where the money laundering, the profit shifting, the tax evasion, it's going down there. And it's funny because they're buying a lot of U.S. debt too. But I'm sure there's a lot of money from all around the world. It's finding a home in the Cayman Islands and the Swiss bank account. We've all heard those words. I will say, upcoming, something to look forward to is we're going to do a deep dive into the Cayman Islands. We're going to learn how did they get that reputation. Sound good? I know if we just spend a little time looking, we're going to find out some really, really interesting information on the Cayman Islands. So, 32 minutes. I'm so proud of you if you stuck with me. I hope you learned something. If you just watch that whole thing, you're a rare cat. And I fucking appreciate you. And we're gonna keep doing this. So, I hope you enjoyed the show. We're gonna do another one right after this. And I appreciate you. And we'll see you soon.